Thank you all for joining this month's recap. Michael and I want to go over a number of topics. Inflation continues to be a hot topic. What's happened so far this year and what we see for the rest of the year ahead. So first and foremost, I don't think we're overly surprised of where we are sitting here at the end of May, early June, where our expectations for the year would be the markets have performed very well, right? We had a lot of stimulus, the vaccines are kicking in, and there's a lot of excitement around reopening. And a lot of that money continues to move into the markets and risk assets overall. And that's really what we've seen play out. Here we are through the end of May. So looking at some of the details for the month, Michael, you want to go through some of the thoughts we saw for the month?
Sure. I think what was interesting about the month was, I guess when you sort of look back at this year as a whole, you've seen value names really outperform growth names. And in May, you sort of saw a little bit of a reversal. When you had the Fed start talking about tapering, you did see a fair amount of action back into the growth names, back into the tech names. But after they reported their earnings, these companies had great earnings, made a ton of money, but their stocks just sort of fizzled. And we think that's going to be sort of a trend where it's not going to really last. You're going to see a lot of money come back out of those names and really stay within the value companies, the small companies, and companies are going to do well in this inflationary environment.
That's great. I mean, you look at the valuation overall, the PEs or the multiples on the growth stocks are still very, very high. And we've talked about this the last number of months too. We expect record dividend payments, and that's supportive of the value companies overall. And historically, they do very well in inflationary environments, and that's what we continue to see. So between the PEs being much higher on the growth and the relative value bargains within the value overall, it totally makes sense of what we saw play out in the month of May.
Right. And when you talk about relative value, when you still look at the last 18 months, the growth stocks are still pretty much double the return of what your value stocks have been. So again, just sort of an interesting kind of what do we really see going ahead, and is this sort of a sustainable trend to continue? So when you look at sort of the rest of the year, JR, what do you sort of expect with the general market?
Yeah, one thing to watch for, especially on the tech too, besides the valuations being high, is when you go back and study from the late 90s and the following 10 years, one thing that you haven't seen a lot of is option-based compensation charges. And again, when you think about what Michael, he just said with the outperformance of growth, not only in the last year and a half, but the last decade, there's a lot of employees that have a huge amount of option in value and compensation that they're going to be exercising in the years ahead. And historically, that's been a drag on the number of shares outstanding. And we expect to see more of that in the tech stocks overall. It's great for the overall economy because people are going to have more money to spend, but it just tends to hold back the companies like that. Whereas on the value side, there's still a lot of stock-based options for value companies. They just haven't had the performance. So there just isn't as large a charge. So likely you'll see that play out. That'll hold things back. And again, with the dividends and the valuations overall, we just see inflation continuing to be something that investors are concerned about, and we continue to be. And that's supportive of dividends and values overall in smaller companies.
Sure, absolutely. I think kind of going back to what you were saying with the reopening of the economy, one thing we've really seen is businesses starting to really reinvest in themselves for growth. And just from different, say, CRM companies that are seeing, influxes of new customers coming in, expanding relationships, that I think is been a great sign for the overall recovery, that you do have companies that say, all right, you got through the pandemic. It sort of seems like we lost this year, but we're picking back up to where we were. And with that in mind, we still need to be growing. And I think that with these types of relationships that you see forming, that's a sort of a strong indicator of where we are within, within these companies and where they want to be moving forward.
And the other things to watch for as we reopen is a lot of companies are opening their offices again this month, starting in June. And there was a recent poll done over the weekend where close to 70% of people don't want to come back 5 days a week to the office. Everybody's gotten used to this balance. So as companies think about reinvesting, they're going to reinvest differently as well, whether it's office space or using that excess money to fund other avenues for growth. And business travelers have picked up because of the vaccine as well. And business travel has come back to some degree. So but we're still about 75% of travel numbers from 2019. So and most of that is the business traveler hasn't come back.
Oh, it'll be interesting to see what happens with the overall sort of office space footprint. Now, if we sort of still sort of stay within the real estate space, I think, as everybody's been seeing, housing inventory is still at record lows. We joke that this has been a sort of a continuing saga through these recordings that my wife and I were still looking for a house. There was a couple of weekends ago, we were scheduled to be sort of the first showing of this one property, and day before, the owners got an offer above asking, sight unseen, waived attorney review, and they took the offer. And it's just sort of right now, that's kind of the market that you're dealing with in some of these areas, and it's hard to compete. I know Megan on our team, she's now 0 for 8 being outbid on her side. So, it's just something I think we'll continue to see.
And again, when you think about this trend, everybody's used to the buy low and sell high mentality. And it really feels like we've entered the stage of buy high, and the thought is sell higher in the future. And Sam Zell, which is a famous real estate investor that's done very well over the years, and a lot of Sam's strategy has been to buy low or buy distressed property and wait and make a lot of money. And he's now moved toward more of the buy high, sell higher mentality and looking ahead. So it's interesting to see even a Sam Zell pivoting toward not trying to find the opportunity or the distressed deal, because it just doesn't exist right now, and looking ahead with the inflation and the growth ahead, it might not come. So we might be in this buy high, sell higher type of environment for many years ahead. That's something to watch for.
Yeah, absolutely. And looking as Sam Zell buying some different properties, we've actually seen a pretty a good amount of M&A deals go through this last month. We had the merger with Discovery and Warner Media spun off from AT&T. We also had Amazon buy MGM Studios, and it's just these are high prices that they're paying, and it just sort of goes to what you were saying, that this might be your new normal moving forward.
On top of that, when you look at where we are in the cycle of the growth and everything else, as larger companies tend to fade a little bit because they've maximized their growth in the last number of years, M&A is the natural opportunity to buy future growth. And again, you're not going to have huge companies buying their equivalent. You're going to see large companies buying smaller or mid-cap type companies, and that should be the natural wave ahead of a lot more M&A deals we'd expect in the quarters ahead.
Okay. And I know as we look to wrap this up, one big topic that's been sort of hitting the headlines lately have been the updates to capital gains taxes. I know that this is something that we're watching extremely closely because it does have a significant impact on sort of portfolio management, planning and trading. So I just want everybody to know that if you do have concerns, please let us know and we can talk through our thoughts. And it is going to be a big change if some of these proposals do end up going through.
And with that, we want to thank everybody for listening, and see what happens next month.
All right. Thank you so much, everybody.